Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thank you for checking out the Market Chameleon pre-market show, where we come live every trading day from 9 to 9:30. And there he is, the King Chameleon, Dimitri Pargamonik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer? It's up there and for everyone to see.
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your broker or call your registered investment advisor. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And I will get started. Let me share my screen here. So today, what we'll do is we'll take a look at, we had some leftover questions. Somebody was asking to take a look at Amazon and the history of the option order flow sentiment and leading up to earnings. So like the days leading up to the earnings. So we'll take a look at that. See what kind of insights we could get from there. But if you guys are joining us for the first time, as we do the show, if you guys have any questions, put them in the live chat on YouTube. Will's monitoring them. He'll read them back to me. If you guys have any questions about Market Chameleon tools, data, analytics, strategies, you want to ask questions, I don't know, just even in general about securities, if you have ex-dividends, early exercises, that's fine. Put those in the live chat, and we'll try to get to them today. And if you want to come on a show live and ask your question, we also put out a link there to Zoom. If you click on that link, it takes you over to Zoom. Once you get there, click raise your hand. You don't have to turn on your video camera, but you'll be able to ask your question directly. All right. And while we're waiting for any questions to queue up, we'll go over the pre-market report, see what's moving in pre-market hours, and then I'm going to hop on to Amazon. And if the person who had that question on Amazon is on there and wants to do some follow-up questions or something in depth that you saw there, you could come on a show or just put it in that live chat. Otherwise, I'm just going to kind of go over it in general terms. So let's start with
that chameleon was Attila, by the way. He hasn't popped in yet, but Attila, if you're in, just let us know.
Okay. So this is the pre-market report. These are stocks that are trading in a pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here, I see 77 stocks made a percentage gainers list, 60 on a percentage decliners. So right now, from that perspective, a little bit more bullish bias at the open. I'm going to filter out this list to the S&P 500 stocks to see. This way we take out any small cap stocks, ETFs, leverage products, closed-end funds, just to focus on securities that are in the S&P 500 to get a better view what's going on there. I'm going to come up here, use this filter in ETF, drop it down. I'm going to select SPY. And by the way, this filter is on, I think, on all our screeners as you go around the website. But I'm going to select SPY, which is the S&P 500 ETF. This filters out stocks that are holdings in the SPY. So we see here 21 stocks made our percentage gainers list, 5 on the decliners list. So from this perspective right now, we're looking like a more bullish bias at the open. Again, today we do have the Fed meeting, right? Well, we're expecting right now, pretty much everyone's expecting that we're going to get a 0.5 point increase. They're going to talk about reducing their holdings, probably start to sell some of those holdings off to fight inflation. And I guess then really what everybody's going to be looking for is what are they signaling going forward? Are they going to still continue to be aggressive, or they're going to be less aggressive? So whatever they're looking at, they might indicate that to us. And I think that will probably be the driver today, what it sounds like going forward. and you got both sides right now. You have people saying, well, they have to slow down, market's down, inflation's coming down. So some people think that they shouldn't be as aggressive going forward and take a longer approach and wait and see. Then the argument on the other side, they already waited too long and they have to be more aggressive and get to that. What's the neutral, Will? Like 2.5%?
That's what they're saying. Correct.
So 2.5% Fed funds rate, that's neutral. That's when they're not stimulating and they're not.
Hey, D, your mic has just gone kind of scratchy, like you're underwater. Maybe plug it in, plug it out.
Just plugged it back in.
Yeah, that's better.
Better. All right. So 2.5 is neutral. Is that where they're trying to get to, or go above it, or and how fast they're going to get there? I think that's what people are going to be waiting to see. So if there are no questions here, Will, on the pre-market report, I'm going to just move on to Amazon to, have more time to discuss that or any other questions that pop in.
Perfect.
All right. So here I have Amazon already. As a reminder, put it in my search. So I'm going to click search. And I'm coming down here on Amazon, on options, order sentiment. So what the order sentiment is doing here, if you guys are looking at it for the first time, it's taking the options, the options flow, and it's using an algorithm to determine, are the order flow that's coming into the market to trade against the dealers, is it more bullish or bearish? Okay, so it's kind of the order flow that's trying to take the markets from the broker dealers, so customers, hedge funds, where they go in there and take liquidity, or is it more bullish or bearish on balance? So it's not looking for one particular trade, one big trade or one out of, because that trade would be in there as well, but it's taking all the trades in aggregate. So where's the push, the pressure coming from, right? So even one big trader cannot move the market themselves. It's going to take, right? It takes all the participants. So it's taking a look at the order flow in aggregate, and what it's doing is taking the volume and converting it to deltas, and it's aggregating the deltas. So each option has a deltas, an option that's very deep in the money that behaves 1-for-1 with the stock will have a 1 delta. And options that is very deep out of the money, maybe like a penny option, will have a 0 delta or a very low delta, because the stock moves up $1, $2, it's not expected to move. So it's using the option deltas as the metric of is how much more bullish or bearish order flow there is. Okay. And we did videos about it. If people have questions, just put them in. So up top here, you're in Amazon yesterday. This was on balance. There's, and we could see over here, there is bullish order flow and there is bearish order flow. So 1.62 million in bullish deltas, 1.56 in bearish deltas. So if we net them out, a positive 63,000. Okay, so on balance, more bullish than bearish. And we could see here the volume broken down: 51% bullish, 49% bearish. And here we could see that the bullish order flow was in aggregate, so every time an option trades, we capture the stock price at the moment of the trade, and then we weighted by the delta. So yesterday, 2,489, such a high, it's hard to even say that. $2,489 was the weighted average price of the longs versus $2,487 weighted average of the shorts, or the bearish deltas. So that's yesterday on balance. And you could see here that it fluctuates, right? Throughout the day, as orders come in, it could increase, it could start decreasing. So it reached the high up here. As it's going down, you could see that around here, more bearish deltas were coming in during that hour and brought it back almost to even, right? So, and then more buyers came in of deltas and sellers. So you could see throughout the day, it remained yesterday almost all day in positive territory, maybe not at the very open. And it went up then came down. So it did fluctuate, but on balance, it was positive yesterday in Amazon. So that's kind of yesterday's close. Today we didn't open yet. And we also have a deeper breakdown, but I'm going to come down here real quick. And I think the question was, well, leading up to earnings, how it looks. So Amazon, I think, reported earnings after the close, April 28th. So this was April 29th right here. So these are the days leading up to the earnings. Okay. And I'm just going to look at end of day for now, just to get a sense of how it looked. So looks to me like that day on balance was positive. But if we took a longer stretch, bunch of negatives here, some positives, negatives. So it wasn't overwhelming. I don't think either way. If you stretched it out a week, probably there are 1, 2, 3, 4, 5 negatives versus 2 positives. If you look just the day before on balance, it was positive, but by no means these bars, if you look at history, they're not that high. Here you had March 22nd, as much as 673,000 on balance positive, 525,000, some big ones, 374. So leading up to it, I wouldn't say, either way, it was overwhelming. But when we look at earnings, it's a little bit different because we're expecting a lot of volume as well. We're expecting people to come in because usually volume increases right before earnings, right? People are hedging their positions. People are using options to bet on the movement of the stock or direction of the stock because everybody knows that there's going to be an earnings, right? So this is already a known event ahead of time. And we're expecting people to come in, right? That's not unusual. So even if we saw high volume, I don't think that's something to be that curious about, but it's interesting to see how are people, the crowd in general or in aggregate, lining up, So let me just come down here, and you could see here if we just started April 20th. So April 28th, I think after the market closed, that's when Amazon reported. I think I'm correct on that. But you could see here at the end of the day here, April 20th, bearish 181,000, and that kind of closed at the highs bearish at the end of the day. 434,000 April 21, that closed on the high as 268,000, came up a little bit here, down, right at the end of the day, up 158. So that's kind of how it progressed leading up into the earnings if we do day by day, end of day. I'm not sure, the question was general. I don't know if that person, if he's on there, and if he wanted to look at something specific, we could do that. I'm just looking at it from a general perspective because the question was, I think, how did the order flow sentiment look like leading up to Amazon earnings? Is that correct, Will?
Yeah.
All right. So that's basically how it looked heading into earnings. And look, it's not, if we look at the history, not big numbers. We've seen very big, if we go down even further than a week, you could see that these bars were much higher. So I don't think anything like huge was getting one way or the other. If we look at, this is yesterday's, you can get a breakdown. You could go back days, go back April 28th, 27th, 26th to get this same view. But you could go down here and say, well, the net deltas, what was the breakdown, how the results? So here is a breakdown of bullish call buying versus bearish call selling. Right. So here, if we just look at these two on balance, more deltas came from bullish call buying than bearish call selling. 958,000 bullish call buying versus 884,000 selling. Here, more bearish put buying than bullish put selling, right? Between these two, and these are the vertical spreads. So vertical calls, bar vertical calls. And so that you could get a breakdown here by kind of like strategy type, we could say. If we come over here, these are top 10 option contracts by delta and balance. So yesterday's, we see the May 6th, that's expiring this week, the 2,500 call on balance on that long to 23,926 deltas. So if it's long on balance, more buyers, more buying than selling on that line. May 6th, 2,580. So strike above that, you could see on balance selling deltas, 14,765, 2520 buying and so forth. So these are the top 10. Amazon probably has a lot of strikes that are pretty active, but these are the top 10, right? So to get the aggregate, you'd have to go through all of them for these, but these, if anything sticks out, it'd be in the top 10. Okay. Coming down here, how to read these next charts is we'll break it down by kind of trader size type. So if the trades are very small, like a one lot with nothing else trading around it, be it like $200, $300 worth of premium stuff, we call that a very small retail trader. Then there are retail traders that could be a little bit bigger, but not too big. I think under like 20,000 in notional, between 2,000 and 20,000. So we break it down, and then there's professional, not institutional. So you could see
we're getting a question from Will, who's on for the first time today. He's asking, wouldn't they balance out and be delta neutral? And also he's asking, if someone buys a call, then obviously someone sells a call. That's his question. So how are you determining whether it's bullish or bearish, I guess is his question.
Right. So every trade has a buyer and a seller. That's correct. So you need, or there's no trade to determine. So what do we mean by there are more buyers than sellers? So the market, it's kind of made up when we think of the market in general. There are market participants who use brokers to enter orders. And then there are liquidity providers, we call them market makers or specialists. And these are dealers. And dealers are providing bids and offers, quotes, and they balance and hedge their positions. They try to stay as neutral as possible, and they're trying to make a spread by, think of it as a car dealer, right? A car dealer has cars for sale. And then when you come into the car dealership, you could trade in your car and they'll buy your car. Right. And then they try to balance that inventory. So the customers are the ones coming to the car dealer to buy. Right. They're saying, I'm buying a new car, or I need to sell my car. What will you give me? And what we're trying to do is figure out what are the customers doing, and are they pressuring inventory? There are a lot of buyers coming in and not enough sellers of cars, or there are a lot of sellers, not enough buyers. So kind of think of it this way. The market is made up of dealers. They're providing the quotes. So when you look at an options chain, it could be resting limit orders, right? Because the quotes are made up of resting limit orders. So you could put in a limit order and it'll display if it's on the best bid or offer. And it's made up of dealer quotes. Mostly it's dealer quotes, right? So because the dealers are the ones providing the markets and moving the markets, right? So you're seeing the markets moving as the stock moves. And that's what we're trying to see, is where's the pressure coming in from the inflows from people, customers trading against the dealers. Now, when that happens, the exchanges don't really tell you that. They just give you the trade, and we have to interpret it from the surrounding data. So we use, different rules and algorithms, and from our experience as being market makers ourselves, that this is most likely an order, buying an option from a dealer or selling an option to a dealer. And if we can't determine it with a high degree of confidence, we don't tag that trade. We just put it as a noisy trade to the side because we don't know. So it is an interpretation, right? It's an interpretation based on lots of different tick data and information and surrounding data that we're looking at. So that's how we determine, if incoming orders is trying to buy, like say call, that would be bullish, selling a call, bearish, buying a put, bearish, selling a put, bullish, buying a vertical call spread, bullish, selling a vertical call spread, bearish, and so forth, right? And we convert that volume into the delta of the option, because the delta of the option is where the dealer would start hedging it. So if a dealer sold a call, that call has a delta, you would have to buy stock to hedge that delta. If the dealer bought a call, that call has a delta, he would have to sell stock to hedge that delta. So the delta would be the pressure, right? That's the pressure on the stock, is the delta. How much delta pressure is on the stock on balance? Does that help answer the person's question? Let me know if he's a follow.
Sorry, I was on mute. Will seems like a pretty experienced trader. I mean, he was talking about, he had a question about the log, how it affect the log return of the delta. But he was asking, he then says, so you're following retail flow. That was his question.
Well, we try to follow all the flow, not just retail. So retail we do classify as like some, if we see a small trade, like say one contract or two contract that's in notional value, under 2,000, we don't see any other trades around it. Like, so sometimes you'll get small contracts, but they come in a series of a lot of trades. So we would group those together. But if we see two contracts trade and nothing else around it for $500, well, it's not likely to be an institution, because an institution doesn't trade that way, right? They don't buy two contracts. Maybe they, but it's not likely. So we say that's likely a retail customer. So we put them in this bucket, right? Small retail. If we see somebody selling, $300,000 worth of puts, well, that's not likely a small retail investor, right? That's an institution. You're not going to, the retail investor would not even get approved for an account like that anyway. You'd have to be able to, have enough collateral to do a trade like that. So then we would say that's most likely a larger institution, right? So we are tagging it based on the information that we're getting from the tape and so forth. So if we saw a trade that was maybe, $1,000 in notional, but we saw a lot of them trading, within a second or 2 seconds, we would group that and say that's most likely one trade sweeping the book, right? So we would put that based on that information as potentially an institutional trader, if it meets our requirement. But we do track them separately, right? In aggregate and separately. What are small retail doing? So in this case, we see here's the small retail, and in Amazon, when we added up just the calls and puts, you know, we look at it here in notional. This is how much traded, $5.7 million worth of options on average, daily average 7.87. So it's kind of like within the average. If it goes above it, you know, like over here, professional traders, $185 million worth of calls and puts they traded in notional versus on average 161 million. So they exceeded their daily average. And we break down what they're doing, right? So here, institutions and professional traders, those bigger trades, they're coming in more bullish. Retail and small retail on balance were more bearish. Does that help answer that question?
Well,
You could come
he then asks, so what's the categorization for bullish or bearish?
So if somebody buys a call, right? Somebody buys a call and we don't see any other trader around it, then that particular trade we consider bullish, right? Because if you're buying a call, that's all you're doing. That means you're betting that the stock has to go up, right? And that would be a bullish trade. If you're buying a put, and that's all you're doing, and that would be considered a bearish trade, because for you to make money on a long put, the stock has to go down, right? So that's a bearish trade. Selling a call, that's selling deltas, bearish trade. Selling a put, that's getting long deltas, it's a bullish trade. So what we consider bearish or bullish is if the immediate delta of your trade is positive, it's bullish. If the immediate delta of your trade is negative, it's bearish, right?
Gotcha. Hope that helps, Will Quinn. They are actually Bollypur was on, and his comment is, at the end of the day, it doesn't matter. Something like SSR matters more. And I'm not sure if you're aware of the acronym for SSR, but he says you can measure the efficiency of SSR.
I don't know what SSR is, but if he wants to come on and tell us what that is.
It's Bollypur did say it later on. He says self-similarity of returns. He did try to get on, and unfortunately the link, and I got to check that, to the Zoom didn't work today. I don't know if anyone else has tried to get on. I haven't heard, but
oh, really?
Anyways, okay. Bollypur, I know you have my email. Definitely email me at support. We can get you on to talk about measuring efficiency in the SSR. I know he's got
and I do want to point out, and I think some people are looking at this and saying that it's supposed to predict something, and it's not predicting any. It's not a predictive analytic, right? It's not saying Amazon's going to be tomorrow 2,500, 2,600. That's not how it works. What you're looking at is data and information to know what other people are doing, right? It's to understand the markets, what the players are doing, so you could strategize yourself and handicap things. So here, I'll give you an example, right? An amateur gambler will come into a casino and look that I could bet on red or black, and I have to predict if the next outcome will be red or black. That's an amateur, right? And I get that question a lot, and I feel like I'm starting to get it, with predictive analytics. What would a professional do? A professional would say, okay, what is the payoff if I bet on red? What is the payoff if I bet on black? And what are the probabilities of winning on red? What are the probabilities of winning on black? And do I have an edge? Okay, that would be more of a professional. So amateurs always try to look for a predictive analytic, but it's not like that. It's a handicap. So I'll give you an example. I can't predict who's going to win the next basketball game or the next football game. But if you tell me, if I could calculate the odds based on, historically who's better, who the team, and you show me the handicap and I think that, hey, you know, I have an edge, even if I think this team's going to lose, but the other team is favored by 20 points, and I don't think that they're going to cover it, I could even bet on the losing team and win. So it's always about its probabilities, and you're looking at probabilities, you're looking at expected returns, and, you know, for positive expected returns. But if you're looking for some kind of a crystal ball to tell you exactly where the stock's going to be tomorrow, then you're going to be disappointed. I don't think anybody has that type of a metric, right, to tell you where exactly is the stock going to be tomorrow, because it didn't happen yet. It's like predicting the football game, right? So what you're looking for is data information that you could use within your strategy to handicap and see if you have a certain edge or higher probability of something more likely happening than not.
Well, awesome job. We're right up against 9:30. We did have some questions from Kim concerning calls, and actually Mike was talking about he had a friend and they were talking about a Disney long call. So something maybe we can talk about tomorrow.
Sure.
There were lots of comments from Bollypur and Will. We appreciate the comments, and maybe we can get Bollypur on. You email me at support@MarketChameleon, Bollypur, or my personal email, williammcbride@gmail.com, and we'll try to get you on the show. Dima, great job, buddy.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade in peace, chameleons. Have a great day. Bye-bye.
Bye.